Federal Reserve meeting and market.
The U.S. Employment Cost Index showed a 1% rise last quarter, seen as a positive sign for the Fed. The Fed is expected to announce its rate decision and hold a news conference with Chair Jerome Powell. The market is trying to gauge Powell's tone to determine whether he will hint at an end to interest rate hikes in the near future, or push back on market pricing for rate cuts.
The focus of the conference will be on Powell's tone and any surprises he may bring.
The currency trade has been in a holding pattern ahead of the Fed meeting. The stock markets in Asia have steadied ahead of the Federal Reserve's interest rate decision.
U.S. Employment Cost Index and monetary policy.
The Employment Cost Index in the U.S. increased by 1% in the fourth quarter, which was slightly below the expected 1.1% rise and lower than the 1.2% rise in the third quarter. This has led to some reassurance that, despite tight labor market conditions, inflationary wage gains are not accelerating.
The Employment Cost Index is considered an important indicator for the economy and monetary policy. However, there are concerns that this trend may not continue, given the low unemployment rate.
The Employment Cost Index is still elevated on a year-over-year basis, with a 5.1% increase, which is an acceleration from the third quarter. Fed officials are cautious about this trend continuing.
The U.S. economy and a possible recession.
The U.S. economy may avoid a recession or face a shallow one this year, based on two key meetings in the nation's capital. The Federal Reserve is expected to announce a further easing of interest rate hikes, which are meant to curb inflation. At another meeting, President Biden and House Speaker Kevin McCarthy will discuss the nation's $31.4 trillion debt limit. Republicans have called for major spending cuts in exchange for raising the debt limit, and a failure to reach an agreement could result in a government default and an economic calamity. Despite some optimism that the U.S. economy may avoid a recession, most economists are not yet sold on the idea of a soft landing. A failure by Congress to raise the debt limit could push the nation into a recession.
Overnight market developments.
Dow Jones Futures, S&P 500 Futures, and Nasdaq Futures fell slightly after hours.
Advanced Micro Devices, AMD, and Snap stock headlined overnight earnings.
The stock market rally rebounded Tuesday, recouping much of Monday's retreat.